Hey, we're live. Welcome to the week that was, Robinhood's weekly market recap. It is Friday, November 14th. I'm your host, Michael Ovacina, joined as always by my dear friend, colleague, boss, compadre, Robinhood's chief investment officer, Steph Guild. Steph, how you doing, my friend?
Hi. Missed you guys last week. Missed you all. Missed you. I know I wasn't far away from you
No, and
physically.
in fact, we had a question in the chat last week, where in the world is Stephanie Guild? And I was like, there's a good chance she's on the other side of this wall because where we
We were
stayed, we were,
we were near each other.
yeah,
I know.
our rooms were adjacent, suites, I
I
should
was
say. It was a very, very nice hotel we were staying at.
I know. I was with my kid. I was doing work and then was with my kids because they were with me. So I had to deal with some other stuff, and we were there for a big client meeting, which ended up being interesting for me, to say the least.
Yeah, if anyone
Big
from
presentation.
Puerto Rico is hanging out with us this week and watching us, it was a pleasure meeting you. It was a fun event. Learned a ton about the town of Dorado in Puerto
Yeah,
Rico.
so
Gorgeous,
beautiful.
gorgeous place. The Ritz-Carlton down there where we were staying was top notch. If you're looking for a top tier hotel to stay at in Puerto Rico, you can't go wrong with the Ritz. Meanwhile, our usual suspects in the chat, Edsman first. Aloha, happy Aloha Friday to you, my friend. Mahalo to everyone. Yes, in the studio making this possible. We got Robin Hoodbird hanging out. A Demu Barry. That looks like a new handle. Welcome, Felipe 2.0. That is an OG. Good to see everyone. We are excited. You know, a lot of people in the chat saying tough week for everyone. It was a crazy week. There was a lot of volatility. Hopefully,
A
you were
lot.
on the right side of it. That because when I see comments like tough week, depends what you were trading. You know, if you're trading from the long side the first half of the week, great week. Trading from the short side the second half of the week, great week. If you're the inverse of those, not a great week for sure.
Momentum unwinds are always tough.
Yeah,
And
we're gonna.
then I had a feeling during the day that like we would see this kind of little sell off at the end of the day.
Yeah, and that's we're going to talk about that because I think I want to unpack a little bit of this S&P chart. We'll look at a few other symbols as well. Don't forget, follow Steph on X and Instagram at Steph Guild NYC. We've got a great show for you today, recapping what you need to know from the week, including, as we mentioned, a volatile week for stocks, investors getting nervous about AI spending, and we're recapping earnings. There were some meaningful earnings this week, including Disney and Cisco, and then we'll wrap things up by looking ahead to the big one, NVIDIA earnings next Wednesday. Don't forget, subscribe to the channel to submit your questions in the chat. We will answer them. As long as we are on air, we will answer your questions throughout the show, at the end of the show, in the middle of the show. But as always, before we get started, some ground rules. Today's content is provided for informational and educational purposes only, does not constitute tax or investment advice, and is not a recommendation for any security or strategy. All investments involve risk, including the possible loss of capital, so please consider your investment objectives and risk carefully before investing. Past performance does not guarantee future results. And last but certainly not least, this live stream is not an official customer support channel. So if you have questions about your account, please reach out to our support teams from within the app. They're ready and waiting to help you. With that, Steph, the bell is rung. The week is done. Time to look back at the week that was. Just one more time, my friend. Are you ready?
Let's do it.
Let's do it. Starting with major indices. Not as bad as I thought. Looks like we got an unch, roughly an unch on the S&P.
Yeah.
We'll show the chart here in a second. 67.34, up a skosh, but really that doesn't tell the story of the week.
Small
NASDAQ,
caps getting crushed.
yeah, crushed is right. Small caps down 1.83. NASDAQ treading water as well. VIX was over 20 today, was down, was up. Implied volatility, and volatility is here to stay, my friends, at least for now. Looking at the S&P sectors, led by healthcare, energy, materials, and staples, that feels like another defensive week, Steph.
Yeah, certainly. And I think, you used to have utilities kind of hang out there with healthcare and energy on a day like today, or a week like today, or week like this week. And it's not the case because utilities have been with AI, right?
It's part of the
Momentum
AI trade now. Yeah, it's correlated for sure.
And you had an AI momentum unwind
Yep, and we
this
will
week.
absolutely looking at the S&P top 10 by weight. Nvidia up, Apple up, Microsoft, but look at Eli Lilly. Wow, up almost 11%, carrying the load for the top 10. Meanwhile, Tesla down almost 6%, Broadcom down, Meta, Amazon, Alphabet. There's your AI unwinds. But Apple has kind of become uncorrelated to this AI trade. Just an aside there as well. Taking a look at what is next. Leaders, laggards. Albemarle, Lilly, Cisco, Becton Dickinson. Today I learned there's a stock called Becton Dickinson. Biogen as the leaders. Meanwhile, on the downside, Iron Mountain. Wow, you don't hear Iron Mountain. Isn't that like the data storage?
Yeah, it used to be like the paper storage.
Yeah, we're like
you would
we
put your,
used to ship all of our
client
paper.
documents.
They literally put it in a
Yeah.
mountain, I think, right?
Yep.
App Loving down. What
Ooh,
else? Molina,
AppLovin.
Dell. Last but not least, Z Bonds, Mr. Bond. Wow, just not doing much. This 410, we're in this 4 to 415 range on the 10-year stuff. What do you make of bonds real quick?
I mean, I think we talked about this when we were on Market Call too earlier this week, like together actually.
Yeah.
And I just think the 10-year is kind of stuck where it is around the 4.25 range. And the reason for that is, especially I think what the market didn't like, and it ticked up a little bit. It was at 4 2 weeks ago. Is you have one thing that the bond market has liked for all its not great things. The tariffs does bring in revenue, and it does help offset some of our deficit. And if we're going to give that away in the form of stimulus checks, which I know some people want and some people need, but that doesn't help the deficit anymore. And so I think that's why you're going to have the 10-year kind of stuck where it is. And that means mortgage rates will be stuck where they are unless we can get this down. And, but then the federal government does want to show bad jobs claims. So
yeah,
we can get through.
We're about to start getting some of that data back, whether we
Yeah.
can trust it or not, or it's numbers and
I don't
fudge.
know.
We won't know for sure. Let's look at the chart of the S&P. In the business stuff, we call this a round trip. Starting on the left
What's
side.
the time period between?
Yeah, so starting here on the left side, this was Friday. Me and
A week
Mr.
ago.
Guy Adami were hanging out right around here. We got that massive rally off of the lows last Friday. We got a small gap
And that
up.
was from government reopening.
The momentum around, hey, we've got some stuff in the Senate getting signed, some Democrats
Yep.
joined the Republicans. So that sort of was the initial oomph to get the market off those lows. Sunday futures open up. We get a rally Monday. Once again, we have a great question from Edsman here about how do you know if you should be long or short. The short answer to that, and let's leave this chart up for a second, guys. The short answer to that is it depends on your time frame, what kind of a trader you are. If you're trading on a much longer duration chart, switching from a bullish to bearish bias is going to take much longer. Maybe you look at a weekly chart like our friend John Roque, and you're still well above like a 100-week moving average. This is a 10-minute chart where using this type of a trading setup with opening range and pivot points, you might get long here and then stay long, and then when you get a signal like this where price breaks through a 3-day pivot range, now your bias might switch to short, because look what happens, especially with something like pivot point and pivot range trading, which a lot of intraday futures traders use. You can almost look at this like staircases. And when price is above a pivot point or a pivot range, it tends to be used as support. And then people get long, it goes up. Now, in this case, this rally was a 2-3-day rally. And then what happens once we break down below that pivot range? We get a massive sell-off into today. We rally all the way back up. Where do we rally to? This is a combination of
To the floor of the previous
previous pivot range. And
Yep.
these are two pivot ranges. You can see I have like sort of this blue box and this yellow box. One is a 1-day pivot range. One is a 3-day pivot range.
Yeah.
When they sort of collide and become one, what that's essentially saying is yesterday's activity was the high-low of the 3-day range. And that's what really what happened here is yesterday had such a big sell-off, and that sort of 1 and 3-day pivot range becomes one, and that sort of adds multiple indicators to a trader. So when you throw that together, Steph, and then you get something like this, we'll call this is the 30-day moving average. Look where price ran right into. And traders, including myself today, got short here. And this is an area where the market wasn't going to go any further. And at least that's
Because it was resistance, like floor was new resistance.
yeah, because this is a spot, once again, studies indicators aren't magical things. They don't just sort
No,
of stop the market. But if every trader who trades this sort of setup sees this setup, what are they all going to do when they get
they're going to trade the same way and it becomes reality.
there you go. And when you've got three indicators plus you've got this 6,800 level sitting above there, what you might see a trader do is get short around this level and put their stop above a 6,800. And if they're
So to limit your loss.
yeah,
So if it breaks through that, you're like, okay, I'm
you're
done.
like,
I'm
yeah,
not
I'm
taking.
done. I took a small loss. I moved
Right.
on. But that's sort of, to answer your question, Esmond, it's like, it depends on your trading. But an intraday short-term futures trader like this, all your sort of things start aligning. And then what you're really looking to see, hopefully,
But
on a
Obi, before you do that, sorry, if you want to, how do you know when to close your short? Like you and I were talking earlier and you're like, I was in and out.
so this is where a trader might say, all right, like let's say we got short at the 30-day moving average of 67.90. We place our stop at 6,800.
Yeah.
That's 10 points of risk on one E-mini S&P future. 10 points of risk is 500 actual dollars. All
Yeah.
right. So if you think about our loss unit as 10 points, maybe we're looking to make 2 to 1, right? Then our profit target would be 20 points. If we wanted 3 to 1, it'd be 30, so on and so forth. And sometimes the market just rips, and you're able to kind of, put a stop order in where if it did get hit, it takes you out at a profitable level. And so that's the secret. Like that's the thing I'm still working on. That's the thing the best traders do is if they get into a winning position, they sort of not just know when they get out, but they know when to sort of take the hands off the wheel and let the market kind of move them into a good outcome. I think the mistake I make this a lot of traders make is they're just constantly clicking the button and just trying to like get in, get out, get in, get out, and sometimes you'll
Just
get
watch it.
yeah
Be
you'll get
patient for
chopped
a
up.
few minutes. Yeah.
Yeah, I think basically I caught this move right here. If we're looking at the chart, is this has sort of made my day, and there you can see the P&L. Like that's a nice day. That pays the bills. But let's move on. We also saw the VIX creep up this week, Steph. Taking a look at this, there's the S&P. That's the daily chart, and you can see when you just zoom out of all that noise, the 50-day moving average was sort of the test this week.
Yeah.
Tested it twice, and here we
It
are.
it held. Yeah.
Yeah, let's go to VIX. This is one
But
we've
what
been.
will we look for to see if it's going to break through? I think that's like the big market question, right?
Yeah, this is where, I think you're probably also looking at some lower chart momentum indicators. If we had something like, we have the 200-day down here. I think if we go back to the intraday chart for a second, I think the biggest thing I'm looking for next week is if there's a retest of the lows from this morning, do we hold those or does 6,700 get sort of broken? And if we break below the lows, I think we're down for another leg. And the reason I say this, we're not in a bear market by any means. We're not even in correction territory. But just this tape from 6,900 down to 67, back up to 68, this is similar, I think, of what you'd see in a bear market tape where you get big moves down and then
Mm-hmm.
big bear
Yeah.
market rallies intraday that you're like, oh,
Yeah.
it's over. And then boom, they crush you again on the next day. So you just got to be careful. You got to manage your
Yeah.
risk. And, in terms of managing your risk, as we said, like where's VIX at right now? It's not looking, starting to get a little,
I was going to say like uncertainty feels like it's starting to rise more because one, we've been in this lack of data environment, which I think is just like markets just don't like it, right? We talk about it before earnings season. Markets don't like that. So it's that your partner went away with their friends for the weekend and you're left on red. This feels like that. So there's a lot of reasons why people might start to bias negative. It's just the way the human brain works. But I also think that there's some things that are potentially on the horizon where expectations have actually gotten a little too high. And nobody likes the corrections, but I wouldn't be surprised if we have one. And then we could potentially like rally rally into year end after that. But it just feels like something's uneven underneath.
It is, and if you we talked about this with our friend Guy Adami last week. If you actually, let's draw this for a second, from the highs of 69.53.75 to the Monday to Friday's lows last week, we just go to our legend and go to the gear wheel on that trend line, and let's just look at the percentage change. We had about a 4% correction, Steph. Like it's a
Yeah.
little mini correction, but it's there. And now we're almost back to that. So if you put that down to a 10% correction from the highs of a couple weeks ago, that gets you to an S&P of about 6250, 6300.
Yeah.
That's nothing to scoff at.
No, definitely not.
Let's
But even if we had like a decent 7 or 8%er, I don't know.
feel like it would take some of the anxiety out of the room.
Yeah.
But this is where, you watch your longer term moving averages, your
Yeah.
150, your 200. Those are usually spots where the market will kind of test and find a consolidation area. If it breaks that, then you peel back and start looking at your weekly charts to see like, okay,
Oh, that's where like the quants will come in and like, just
yeah.
reduce all exposures, which usually longer term is an opportunity.
Yeah, it's not only the quants, but then if you've got people that are trading on margin, they start getting margin called, and then if they can't meet those, you
Then
get the
yeah,
forced
you
selling.
get the sell off to cover margin. Yeah.
And
And I think a little bit of that happened in crypto, to be honest.
Yeah, let's talk Bitcoin for a second before we go to AI. Bitcoin finally kind of
There you go.
giving up the fight. We talked about this on Market Call as well.
This is a big deal, actually, I think a little bit, just in the short term.
Yeah, we had this show. If you caught us on Market Call this Wednesday with Dan Nathan, Steph and I were in studio in New York. This is the drawings I had from the chart on the episode. Triple top in Bitcoin at around 125. We've got a death cross imminent, 50-day about to cross below the 200-day. This trend line that we drew, which has been a long trend line going back to 2023, is getting tested and was violated today. And then you have this sort of 100,000 point kind of round number, psychological number. And here we are. So the question is, what will happen with Bitcoin? Will this sort of go back to this 75,000? We'll start trading in this, you had 25,000 points above 100. And then usually when you get a break below, you see that same sort of range after you break support, which we'll just call 100,000. So are we now are we going to be in a range of 100 to 75,000 on Bitcoin? Because that's the last time on Liberation Day, 75 was kind of the floor that was put in on Bitcoin. I'm curious in the chat, what are you guys seeing on Bitcoin? Are you trading it? What are some things in the crypto market you're seeing? Let us know in the chat. Meanwhile, Steph, this is the story right now. Like, what is causing all the anxiety in the market is this possible bubble on AI. We've seen all these stories about CapEx spending from the big Mag 7 and others. Oracle, for example, they got crushed this week, kind of giving back all of those gains. Remember when we were at Hood Summit, they reported that blowout earnings.
Oh, everyone was piped up on Oracle.
Yep, and they basically round-tripped that move.
They round-tripped.
Yep. Take us through this from your point of view. I know you've written about this. You've talked about it on media. What are you seeing?
I mean, expectations are
Everything.
Everything is.
Everything is expectation.
Yeah. Look, spending has been insane. I mean, if anyone would have 3 years ago, 4 years ago, like I remember first joining Robinhood and hearing about AI and hearing about robotics and things like that, and I would have never guessed the amount of dollars that it is projected to be spent by the hyperscalers and beyond, and everyone wants a piece of it because it's money. And it will be a point in which it's overspending because the last dollar in will probably not be great, but this spending, there was a pivot point in this last earnings season where some showed that they're spending more than their cash flow. And up until this point, each quarter it was like, well, they're spending a lot, but they make a lot. And that's just like the pivot point that we've reached. And I think that's it's pushing all the questions out there. So Oracle's been one of the biggest losers. It round tripped. And I got to tell you, like personally as an investor, it came up on one of my screens and I was like, I'm not sure. Didn't invest in it. Popped. Regretted it. Just like,
Pop.
you know.
It. You know what it did,
Um,
Steph? It pop, lock, and drop. It
yeah.
look at this chart real quick. There's the gap up from earnings. It not only retraced that gap, but it's gone all the way down and to the penny. The 200-day moving average saved
Yeah.
it. Continue.
I mean, so it came again, it came up on one of our screens before that because it was starting to lift.
Do we lose Steph? Oh, sorry, Steph froze. So let me pick it up. Hopefully, we'll get our audio back. Basically, you with the aggressive push into AI infrastructure, including the partnership with OpenAI, it's kind of has left it deep in debt and bleeding cash. And Nvidia also under pressure. Let's bring up the chart of Nvidia, as this, of course, we're going to talk about this later with earnings. Also under pressure. One analyst called it priced for perfection, and that's never great when you hear priced for perfection. A warning that expectations have gotten far ahead of reality. But big picture, and I think we're seeing this across the market, is it's not that the AI trade isn't dead, but it's certainly pumping the brakes and cooling off a bit. And the minute you start seeing some of that kind of hit the tape, you're going to have people that are like, all right, if you've made a decent profit, time to take some of that off the table, and that may exacerbate some of the selling. But I think something that Steph was going to bring up is this article from Financial Times about this idea of phantom data centers, which kind of muddies the forecast for U.S. power needs, discussing how power is generated, demand in the U.S. is being inflated by this problem. I see it on my electrical bill. I'm sure you guys as well. But essentially, they're saying data centers are approaching this point in sort of multiple utilities in search of this power demand. But let's look at the chart of Nvidia real quick, and here we are. This one coming off of its highs, not looking as bad as say an Oracle chart, but right there on its 50-day moving average, closed above it, so that held. I was a little bit young for this, but this is kind of similar to some of the warnings from the 90s. When they used to look at something like internet traffic, when internet traffic wasn't growing as rapidly as they thought, it fueled concerns that as companies were taking on this debt, the same thing in the AI space is happening, where as all these all these hyperscalers are spending on AI, but like, what are they spending on? Is the actual demand there, or have we gotten so far ahead of ourselves? So let's take a look in the chat. How you guys doing? Robin Hoodbird talking ETH and Sol, Quantum Queso Dip, also recurring staking on Solana. Yeah, so a lot of crypto talk. Yeah, if crypto is one of these things, you guys are in it for the long run. I should say anything really. If you believe a story in the long run, dollar cost averaging over time is one way to sort of average out your entry price and smooth out some of that volatility. Edsman, some weeks this is education, some weeks it's therapy. It's a little therapy this week, but once again, it all depends on how you were trading. If you're an active trader, this is what you wait for, these sort of volatile days where you're getting big swings in the market. If you're an investor in this for the long run, this is one of those things where some people will say, hey, turn off the TV, don't pay attention if you're not margined and you're sitting in a cash account and this is a long-term investment plan you have. Understand where your risk is, where your exposure, manage that accordingly. Meanwhile, for a more active investor, like, is this a time to start rotating out? You're seeing a lot of that in the market right now, rotating out of tech names, going into the healthcare, not utilities anymore, but some of those defensive sectors. Speaking of earnings, meanwhile, we had a few interesting reports this week. Let's start with Disney. We talked about this last week with Guy Adami. Here's one. not a great tape for Disney. Um, taking a look at the chart, we broke through the 50 and 200-day moving average on the report, so that's a big gap down. Now we're trading below that 200-day. And to zoom out, remember, we had talked about this sort of Goliath of a range in Disney going back all the way to 2022, where we've tested sort of this 125 area once, twice, three, four times. A quick little, hey, if you were thinking this range was going to hold going to earnings, selling a call spread up here might have been the correct play. And based on the tape, that is the case. We also had StubHub. This was one we had this week. Was down on the fact that they are not giving guidance. And this is a newer stock. So you're seeing a stock that just sort of IPO'd. There's your high on the IPO of 27.89. We're drifting down all the way down to $14.50 on those earnings. A few others, just taking a look. We also had Circle. This is one that I know a lot of Robinhood traders have kept an eye on. Circle Internet Group. Continued downward move on that. This is another newer issue. Finally starting to get a 50-day moving average in place. We don't have a 200-day because the stock hasn't been trading for 200 days. And that's something you have to remember when you're looking at a newer issue. Your technicals, you need some time to sort of get those things going and baking into the story. But we're almost back down. We're almost round trip back down to the IPO of 64. So this is, it's very similar. You see this a lot with sort of high flyer IPOs. One of the reasons why, some traders, if they're not in on the IPO, they kind of wait, kind of let the dust settle and sort of get a sense of where the stock trades. Meanwhile, yeah, no, I don't own any of those, just so you guys are worried. Last one I want to take a look at was Cisco. Let's take a look at Cisco. This is one that reported this week. Part of the tech trade there, and there you go. This is the opposite side of the coin. Trading up on the earnings, gapping up, closing near its all-time highs here of 79.50. This is a stock that has done pretty well, over the last 10 years, making new highs. But with that, guys, we're going to do our best to get Steph back. So I'm going to give the guys in the control room a break. Let's take it to, in case you missed it, we'll run some headlines, and then hopefully we can get Steph back. Otherwise, I'll start taking your questions, and we'll do our best to get Steph back. So we'll see you in a few. We're back in 30 seconds. Hey, we're back.
Can't see anything.
And I think we got Steph. Maybe.
I'm here, but I don't see anything, but I'm here.
All right, we hear you, Steph. Do you hear me?
Okay.
There we are. Do you see? Well, just look at your camera, Steph.
I know. I'm like, I don't see anything. But
That's all right.
okay.
We're just gonna
Cool.
roll.
Hi.
We're just gonna roll the rest of the show.
I mean, what is this is like when we were in Puerto Rico? Like
Yeah. Oh yeah.
What happened to me during my presentation? Like this is just it follows me around. It's fine. I'll just roll with it.
Yeah. For those that don't know, Steph was on stage, and there's this thing in Puerto Rico where the power just goes off randomly at times, and it had done that before the event started, but they rebooted everything, and then when you got on stage, the lights just started doing their own thing. They just started it was like a dance party without music. But our friend Yavik was down there with a few others, and you got through. It was great. Steph, you're back. We didn't lose pretty much anyone, so thank you everyone for sticking around. It reminds me of the first show we ever did, Steph. If you remember this, the first time we ever did the week that was, we came off the countdown, the wipe happened, and my camera had froze. We had no camera on my screen. You were just sitting there. This is the first time we were ever live. So,
I do remember that.
life's way of doing that.
Yeah.
Let's take some
Bookends.
let's take some bookends is right. Let's take some questions, but before we do that, tell us your favorite thing about the week that was. Forget about what you learned this week. What's the favorite thing about what we do this show every week? Do you like hanging out with us? Do you like the community? Do you like Steph? Do you like whoever? Like what brings you here every week? What do you
Q&A part.
Yeah, because we want to take this and we're going to evolve this show next year into a few other things, and we want to know like what would get you to tune in live every day or every week. What's your favorite part? With that, let's go to our first question from our good friend TJ. Do you think the market will level off again from here? So I'm going to take that as, do you think the bottom is in, Steph?
This is such a hard question, like in the short term. For your, in a shorter term time horizon, I do feel like there are people who are getting a little more and more nervous and will want to book their profits.
Mm-hmm.
So I can't say for sure. No one can say for sure what happens in the short term, but I am personally a little bit nervous. And we'll be watching it to look for opportunities to put money to work, because I think some could pop up. I don't know, Obi, if you think the same, but
let's go back to the charts. I've got the S&P futures up again. This is a weekly chart. So these bars are 1 week at a time. It sort of gets rid of some of the noise. When you see 3 weeks in a row of down red candles, and you start getting, what our good friend John Roque says, this is what might be called a distribution phase. And if I remember his line correctly, it was at the top of markets during distribution phases, investors with superior information sell to investors with inferior information. And that's the tricky part, is what don't we know? And I would say also, like, what don't, retail has definitely gotten it right over the last 6 months, I'd say, from the Liberation Day lows when everyone was sort of panicked out and retail sort of drove this market back up. But now the question is to some of the stuff while you were off camera that you had shared with me is, what's some of this AI data, like this sort of, can we trust things? And then you got Michael Berry. Let's talk about Michael Berry for a second, Steph.
Michael Berry, yeah. He put out, and this is all over Twitter, so I'm sure a lot of our fans listening, saw it themselves. But he was put out that he shorted, NVIDIA, and using puts. And so he did clarify, like someone was like, it's a $200 million trade. And it was like, the guy was like, well, that's not how options work.
Yeah.
But then he recently announced that Scion Asset Management, which is his hedge fund, he closed that down.
Mm-hmm.
And he made some weird, like, he's like, something's coming on November 25th. And then I think I saw somewhere else that was like going to be a blog. And everyone's like, what year is it that he's announcing a big blog? But his biggest thing that he's pointing out is something called the useful life trick that I actually started looking into in 2023, because I noticed more tech companies at their earnings were doing this, and people were calling it the useful life trick, or some analysts that I was reading. But essentially they extend their time horizon for the equipment that they have. And that lowers their depreciation expense, which makes their earnings look higher.
Yes.
In the moment that they do it. So he is saying that it's like, it's not fraudulent, but that it's like not real earnings. It's like accounting magic. And look, most companies did this, but they've been doing it for a while. And I actually think it may not be a lie, because as a function of, we know from COVID that everyone had to make do with what they had, right? Like you couldn't, when you were trying to buy something, it would take longer to arrive. Tariffs may actually be doing the same thing. So It's, I'm not sure it's like that as big a deal as he's trying to make it, but all it does is pour gasoline on the concern that we talked about right before everything got out for me, which is like revenue versus cash flow.
Mhm.
And how long is it really going to take to make the revenue versus the cash flow? There was a company also this week, a small one called Nebius, that is also involved in this AI trade. And during their earnings call, they announced that their debt on their balance sheet had gone from 980 million to 3 billion in one quarter. So, that's another kind of like red flag. Like, is this spend going to be worth it? And that's, I think, that's the biggest question that's driving all this stuff. And I think it's also affecting quantum names, all of it. Do I believe in it in the long term? I do. Do I know if it's gotten over its skis in the short term? It's hard to tell, but it's possible.
Yeah, and everyone keeps going back to 1999, 2000. Like we
Yeah.
lived through that. You were, you had started
Young buck on the trading desk at Fleming Asset Management that Chase bought and then JP Morgan and Chase merged.
Yep, I was 99. I was graduating high school. 2000, I was a freshman in college, and my I was on an accounting track, so I was taking some, you know, some early finance classes, and one of the things our professor did was make us, and the college paid for it. We got a subscription to the Wall Street Journal, so like I had to read the Wall Street Journal every day, and that was I remember the first time sort of reading about markets was that sort of the right into the top of 2000. So I don't remember it as viscerally as like say 2008, but this is one of those things where like, yeah, the internet worked. We know it worked, but as far as the investors and markets sort of putting money everywhere at some point, thinking like, well, one of these has to pay off, and then you had the crash, then you had 9/11, so like things are going to happen before it just sort of gets to
Yeah, but
before we get to the singularity.
some of those companies did make it, right? Like
Hmm.
some of those, like Cisco's still around. Like there's, some companies did make it. I think the big difference between then and now is that actually none of those companies that were hot were making any revenue,
No.
at all. Like they had negative earnings, and these companies do. I think that just the big question is like, are they spending too much
Yeah.
relative to how much they make?
Yeah, let's take a look at the chat real quick. Some awesome comments. We'll just start with Edsman. I have very little in regards to talking about trading and high level investing techniques around here, meaning Hawaii. It's almost like having coworkers to discuss with. Keeps me motivated to hang with you all. That was beautiful. Thank you, Edsman. Also, we had, there's another good one. Hold on, I had it. There it is. Oz KL building. Bro, I feel like Michael Burry, it was just a little too soon. Yep.
Yeah,
Being too soon and being wrong are sometimes the same thing.
but he actually, I think he started talking about his like pre 2008. I think he started talking about in 06,
Mhm.
which was also really early.
Well, I think his first, if you actually read the book, which sorry, compliance, I'm going to make a book recommendation here. The Big Short is a great book. The movie's fantastic. I think it's one of the best movies about like how you can make a movie that entertaining about something so technical and nerdy, which was credit default swaps and CDOs and CDSs and all that. The book really gets into some of the details. I think his first CDS that he bought was in like 2005. So
Yeah, I
he
was
had to
like
pay.
05, 06. 06, he started talking about it more.
Yeah, and what basically that means that product he had to pay ongoing premiums to all the big banks that he bought these from, probably Bear and Goldman and other places. So his fund is bleeding cash,
Mm-hmm.
waiting for the end of the
For this to
world,
work. Yeah.
and finally, phew, and then and all along the way, I think the movie does a really good job of building that tension between his investors and him. Like, what are you doing? Like, give us our money.
Because sometimes you can't stay solvent long enough.
Yep.
To be right. We've got 3 more questions. Should we touch on them?
Let's do it. Let's go. Next question. Felipe 2.0. Can you look at the Ethereum technicals? Yes, I've got the Ethereum chart up right now.
Let's pull it up.
It's not looking great, and I'm going to show you why. We've got a recent high of 49.55. trading below a downward sloping 50-day has violated the 200-day.
Yeah.
But I will say this: if you're
But
hoping for
not death cross.
no, not yet, because it's
Yeah.
such a dramatic move.
Yeah.
But what I will say this, and this is why you got to have either multiple charts or multiple views. You go to the weekly charts, we just hit the 50-week moving
Yeah.
average. And so if you hold here, maybe that's a sign of life that we found some support for Ethereum. But with Bitcoin falling below 100,000, I would imagine there's some correlation here and your 200-week moving average.
Are those triple tops too when you're looking at it like that in a way?
I would call that's a single top on the weekly. Let's go back to the daily and see how that was formed. Yeah, you could kind of call that. It's almost a quad top if you really look at it. If you're going to give
Yeah.
a kind of a range to that, sitting up here 49.55 to about 47.50. That's a big range because we're talking what 200 points there. Yeah, that's not great when you got once, twice, three, four times the lady, and then there you go.
Is this the equivalent of me saying like the market always gives you a couple times to get out?
Yeah, kind of. I mean, that's one of those things as a technique. This is kind of technical analysis 101, tops, bottoms,
Yeah.
uptrends, downtrends, kind of Dow theory. Another great book. There's a few technical analysis books that people kind of call the Bible. And that's like chapters 1 through 3. It's just understanding trends, basic support resistance. Especially when you get to a daily and weekly chart, it's more meaningful than if, I see a lot of YouTubers like they're doing like 30-second charts and they're drawing a million support resistance lines and like that kind of like doesn't really hold. But when you've got, long-term charts and you're seeing price levels hit multiple times, it tends to be a little more confidence from a technician's point of view. Next
Yeah.
question from Orpheus 711.
This is right up your alley.
How should I view IV in an options contract for intraday trading? Are there any advantages to using this with VWAP? All right, so let's unpack this really quick. You're an intraday trader.
And IV is implied volatility, right?
Correct. So if you are trading the underlying instrument, there's no such thing as IV. So let's just go to, I'm going to do NVIDIA. Let's just do that. Just a rando. This is an intraday chart of NVIDIA. Now, if we were day trading or scalping shares of NVIDIA, right? You buy NVIDIA for 180, sell it for 185, you made $5 a share. You're just trading the supply and demand of the shares. When you start trading options on an underlying in the form of a day trading strategy, there's a few nuances here that we have to keep in mind is what strike are you choosing? Because the strike you're choosing is going to determine the option's delta, and that delta is going to determine the sensitivity of the change in the option price relative to the change in the stock price. And then the third factor is the expiration. I'm just going to make an assumption that you're trading the most shortest dated option you can get your hands on. Now, with something like NVIDIA, there's no 0 days except for on a Friday, so maybe you're trading that. Next week, you have your 7-day. If you're trading something like an ETF like SPY or Qs or index options, you're going to have those 0-day options. And so those options, the sensitivity of their change is going to be very much in line with the change in the stock price. But implied volatility, to answer your question, doesn't have a lot of impact on short-dated options. In fact, the Greek vega, this is how you would understand how much sensitivity there is to implied volatility. Let's bring up next week's options on NVIDIA, and I'll just kind of show you if we add vega, which is the Greek for implied volatility, to our option chain. You can see right here, let's just say we said, all right, Monday, NVIDIA's at 190, we're going to buy the 190 call and try to day trade it. You've got a vega of 10 cents. What that means is if the implied volatility, which is we'll just call it 70%, the implied volatility increases to 71%, this option that's trading for we'll just call it 630, is going to go to 640. Okay, like it's not a huge deal, but your delta is a 46 delta. So it's roughly a kind of 50-50 shot there. If NVIDIA goes from 190 to 191, the option is going to increase by 46 cents. So almost 5 times more than a 1% increase in implied volatility. All of that to say, Orpheus, short dated options, especially 0-day options, your IV changes aren't going to do much to you. It's really delta and gamma are your biggest Greeks that you have to be concerned about, because this option is either going to be in the money or out of the money when it's that close to expiration and that close to at the money. And at the end of the day, as that price is swinging around, your deltas are going to go from 0 to 1, 0 to 1, and that's going to really make that volatility within your profit and loss. All that to say, once again, is, if you use options to day trade, you have to understand your Greeks, and especially the ones that matter. But for a more direct and simpler exposure, you're trading the underlying shares, or in the sense of a futures contract, it's just more of a direct connection to what the underlying price is doing. Great question. Robin Hoodbird, our good friend and artist. Did you see that picture, Steph, from Robin Hoodbird?
Yeah, it was great.
It was amazing. What are some ways to hedge against market turbulence? Steph, how do you look at hedging portfolio risk?
I mean, it depends on what you have access to and pricing when you're looking at it. I think there's, if you, the saying always like buy the umbrella before it starts raining. So, um, you know, some things you could think about if you're eligible and suitable and all those things is buying a put option, buying a put spread. So some of it is being paid for. It kind of depends on what your view is as well. And those things can, again, really just depends on like who you are and what you care most about and where the pricing is. Vol has already, we showed, right, like ticked up. So I'm sure the price of a put is higher than it was a week ago. And the other thing, that I think about it, just like, for example, within Robinhood Strategies, is how long am I in the stock market versus just owning higher yielding cash? And it's not as what it means is that it's not really acting like a bet against the market, because it's not going to go up if the market drops a lot, but it won't do much of anything, which is also a hedge.
Yeah.
And then go ahead.
Oh, go ahead. Finish.
And then some people will look at things like commodities, or if you're looking, like if you want to stay invested in the stock market, you can see like healthcare was the best performing sector. And, I've been nervous about the market since before September. Thankfully, we had enough beta in our portfolios, for example, that we didn't really we weren't behind the market, because I was wrong about September. But we had a little bit of I think sell off at the end of September, but it's really tiny. But what we did start looking at the end of October was buying more healthcare in our portfolios, because one, it had not done the same things as other sectors, and two, the need is kind of always there. So healthcare, consumer staples, like those are places that often, are not something you want to own in a bull market, but can be helpful in a market, like things that pay dividends, essentially.
Yeah, some people do the dividend yield
Yeah.
approach. There's so many ways to hedge risk. We talked a little bit about last week. For the more advanced traders that can understand how to, what we call beta weight, so they can look at a portfolio of stocks, beta weight
Yeah.
it to an index like the S&P.
You look at how much notional you take on
Yep.
relative to how much notional you have in your portfolio.
Yeah. So like, if let's say I had the equivalent of 50 S&P deltas, and it could be like a bunch of shares of stock, it could be shares of an ETF. There's a calculation that can be done. So let's say I'm long 50 shares of the S&P, through a beta weighting system. I can then go into an S&P futures contract and sell one future, and I'm hedged, because the sort of delta there is a 50, and you're kind of neutralizing your deltas. This is why the Greek delta is so important. Because on the stock side, if I own 100 shares of something, I'm long 100 deltas. Every dollar it moves, I make or lose 100.
Yep.
You start peeling in some puts to that, you can reduce that. We showed a position last week in this demo account where we looked at an example of an investor who had long shares of the S&P ETF, about 270 of them. How might you look to hedge that exposure? Well, you can sell calls. So, like, selling two of these 699s about 3 weeks ago to then purchase some puts on the downside. The puts have increased in value, the
Mm-hmm.
calls have decreased. That profit has hedged some of the loss of the shares. And then, as Guy and I talked about last week, knowing when to peel these off in the case of the market putting in a bottom. In this example, these options expire December 31st. So this portfolio is technically partially hedged through the year, but the more the stock market goes down, the more these calls will approach zero. So I think these were sold for like $10. Now they're trading close to 4. These puts were bought for about $9. Now they're trading for about 12, 11, somewhere in there. So they've gained some value. But if the market keeps going down, these puts are going to increase, and the deltas of these puts are going to go. Right now they're 40 deltas. So two puts are acting like short 80 shares. Meanwhile, your short 699 calls have a delta of 23. So you're another short 46 shares. But as the stock market goes down, these deltas are going to get less and less, so they're going to do less of a job of hedging your portfolio. Meanwhile, these puts are going to increase in negative deltas and start hedging more and more and more, till eventually, if SPY gets below 664, you're hedged, because eventually they'll be worth their intrinsic value, and for every dollar SPY goes down, your shares will lose, but your puts will gain. So you have to understand the relationship of deltas relative to what you own in your portfolio. That's like the advanced kind of technical way to hedge and know where your exposure is. But hell of a round of questions there. Really enjoyed it. Steph, let's look ahead next week and then what to watch for. Starting with the economic data calendar. Hey, look at that. The government's back open. Time for some data. Some numbers will still be delayed, but we can glance at the FOMC minutes. And
Yeah, too bad this isn't a week that you get much.
Yeah, right. It's a shorter week. FOMC minutes, Philly Fed. We also get consumer sentiment on Friday. Also said the missed job reports could be coming soon, so hang tight for that.
But they tried not to send it. I think they were like, "Oh, we're not going to share that."
Yeah, I think that's another one. We start getting some of this data. If it's really bad, that might push the market. But then again, you might also get a higher likelihood of a Fed rate. I think the Fed rate.
That's the thing. Like, a lot of the Fed minutes will show you, and I think that the Fed, they're really torn, and a bunch of the Fed governors have been out saying, like, it's not a foregone conclusion. In fact, we don't think you should cut at all. And so that also had to shift expectations. So it went from like a definite in December to like, I think 60% probability in December. But looking through some of the challenger data, which I wrote about actually this week in Investors Guild, I don't know. I think they need to cut. But I also think, and I talked about this on CNBC this week, I think we're kind of like Europe now was after 2008. So Europe was like one interest rate policy for all the countries and one currency. And that actually hurt them because Germany was really strong. They benefited a lot from one currency. Spain and Italy and Greece, they weren't doing well. And so they were in this like catch-22 of like, who do we care more about? How should our interest rate policy like be defined? And so I think the Fed is kind of in that place too, because there's a lot of people who've lost their jobs in the government. Like, the job market isn't growing. It's not necessarily like falling off a cliff, but it's not growing. And so I think they're in this place where they're like, but then you have the market that's going crazy. So you have some part of the economy that's growing like crazy. And so that's the thing I think they're kind of in this tough spot.
Yeah. Steph, another great comment from the chat. Rob Shue. I love the Robin Hood essence. Driving up to the lake, I saw a group of people gathered at someone's farm, and I imagine they were figuring out how to work together in their community. Same here. Thanks, Rob. That was really nice. Moving over to next week's earnings calendar. Here we go. We got retail.
The big kahuna.
TJ Maxx, Gap, Home Depot, Lowe's, giving home retail. I don't know what this is saying in their own right, but clearly the biggest name here to watch is NVIDIA. Coming Wednesday. Let's just get right into it, Steph. We talked a little
Yeah,
bit NVIDIA at the
it's a
top.
retail Wednesday plus NVIDIA and
Plus
Palo
NVIDIA.
Alto,
Yeah.
or retail week actually. I'll be watching NVIDIA. We talked about it earlier when talking about AI. But expectations, which are everything, they are high for this company. So analysts are looking for $1.25 per share, and many expect another beat and raise quarter. So remember, in a not high expectation environment, beat and raise is great. But in this environment, beat and raise is not enough. It has to be like beat and crush it to the moon. The focus is going to be on like Blackwell chip sales, how the hyperscalers are spending. Are they taking on any debt for some reason? They probably don't need to. What's happening with China? Are they actually selling in China? Earnings growth is expected to be 54% year over year. And then looking ahead in 2026, 50%. 91% of analysts have a buy rating. So it is well loved. Price target is 236, or the average price target, I should say, across the street. Just like to me, the other thing is like what Obi probably told you about earlier, what I had planned to talk about, which was that FT article. And is there, is the demand for power less than seems? But then also I read another thing where growth is going to be hindered by infrastructure. And so it'll be a nice window into what's happening. And I don't think Jensen Huang is like, he's always optimistic. So you kind of have to look at the data, I think.
Yeah. Sorry, I got a little bit of sneeze here. Really quick, I want to show the NVIDIA chart, but quick question from Oske. Berkshire buying shares of Google. That was interesting.
Yeah. I just saw that on Twitter.
But let's
they got a lot of cash.
Yeah, they do have a lot of cash, which is another sort of bearish when Berkshire piles on the cash.
Yes and no, though, because I feel like a lot of it was done by Warren Buffett himself, and he's an old man. He probably wants to leave his legacy in a place where like the next person can do something.
Yeah.
So I wasn't reading into it as the same as others, but people love to read into it that way because we're all like to be bearish sometimes and alarmist.
Yep. Let's bring up the chart of NVIDIA. We'll look at the expected move real quick. Here's one, Steph. This 50-day has been held multiple times since September. We tested it once, twice, 3, 4, 5, 6, 7, 8. Losing track of how many times the 50-day moving average is held. Here we are closing at 190. We have this sort of 195 resistance from the last time. We're kind of coming up and down. If you spread this out, you almost see the start of a head and shoulders pattern, which I don't take a huge. You can find a head and shoulders in just about any chart if you look close enough. But my concern here is, to your point, like have they sort of is so much already in the price of the stock that if they don't blow this earnings away, is this going to be the straw that kind of breaks the camel's back next week and pushes the markets lower from an expected move standpoint? And guys, I'm just going to say this again. If you're watching it live or watching it on the record before Wednesday, you've got a 72% implied volatility next week. That's when the earnings is happening. You have an expected range of plus or minus $18. We look at the money straddle. Once again, you're going to want to do this closer to Wednesday. At the money straddle right now, pricing in. Oh, I've got to change this account type so I can put in a straddle. $15 expected move on a $190 stock. That's 7%, 8%, give or take. But your implied volatilities, guys, you have to keep an eye on that. If you're thinking, I think NVIDIA is going to rally. Let's say you wanted to buy this 200 strike call. Well, with it trading at 355, you need that stock to be at 203.55 by next Friday to make any money on that trade. So you could still get a $10 move in the stock, or $13 move for that matter, and lose money on that trade. You have to be very mindful of that. This is one of those where you don't see a lot of, it's a tough one to trade into earnings because NVIDIA is one of those that can just kind of melt your face off in the wrong direction. But just looking at the skew right now, if we go 200 call trading 355, the 180 put trading 325. There's still some call skew in this stuff, which means investors and traders are putting a little more premium on the upside than the downside. Sometimes that's a clue. Other times could be, it's not that much of a skew, but I think that's traditionally what we see going into an NVIDIA earnings call. With that stuff, we're not only in the home stretch. Guys, we have an announcement to make. It's not the best announcement, but we hope to have something to fill the void, so to speak. So this is going to be our last week that was. This is it. This is the show that was. Steph,
It was a good run.
you wanna say anything to the audience, to the fans?
I'm without this show, I would not have gotten to know some of you so well, and it makes me it really keeps me going every day. We all work too much sometimes, and it just really kept knowing that you guys are out there and listening and want to hear from us, and that we can help you, because that is why we're all here, just here to help you. And so that's what I just really cherish getting to know all of you, and Ed's getting to meet you in person and see pictures of your little boy and all those things. That will be forever in my heart, and we will definitely connect again in other ways. But for now, not this way.
Yeah, and I see the comments in the chat. Yeah, WTF, Los. I'm with you. This is one of those things, and let me give you a little context, guys.
Yeah.
We get challenged here at Robinhood to really, everything we do needs to be at a premier level. And I think with this show, we have built a wonderful show. We built a wonderful community. But as Steph said, we need to make sure that everything we do reaches a certain level. And so what we want to do is we're gonna sunset this show, but in the service of building something new.
Yeah.
And so what we expect to have happen is, starting sometime in the new year, we're going to be back live every week, and we are going to laser focus on an options education weekly live stream, where we are on air during the markets. When the markets are trading, we are going to do options education. We are going to show off all the new features and functionality, not only of Robinhood Legend, but of the mobile app, which, since I've been here, the mobile app has grown so much to appeal to the advanced options trader set. And we need to get out and teach you guys how to use that, how to understand the nuances of options. Maybe we'll slip some future stuff in there as well, because I know we're going to want to touch on that. And then there's going to be a lot of stuff coming on event contracts. So in order for us to serve our active traders better, and as Steph said, our time is limited. Steph, you guys have no idea how busy Steph is. We need to reduce to grow. And so that is what's going to happen. And we will certainly let you guys know when we are back. And hopefully you guys enjoy that, and we can build an even better community. But before we sign off, we have to say thank you to everyone behind the scenes. Don't run the music yet. You guys have live production is no joke. As you saw today, we lost Steph. We got her back. That's because we have an amazing control room on the other side of this wall.
Yes.
Matt Olson, Claire Pilarski. We've got Steve, who's not here this week. All Devon in New York, who produces stuff. Devon, you should just come on camera and wave hi if you want to. And then we've got
he's always sitting here.
We've got a crew.
He takes care of me in New York.
Yeah, there's Dee. Hi, Dee. And if you guys want to come from the other room and come over here real quick and say hi, please swing into the studio here. We also have some folks in our corporate headquarters out in California. They're monitoring the stream. They're sitting, hanging out. Yavik, who helped build the show. Dan, who helped build the show for us. We got some people coming in. This is producer Claire. Just come say hi. That's producer Claire. The stock market isn't
Never
real.
got to meet her in person.
Yes, the stock market is not real.
All right. We also, big thanks to our friends in legal and compliance. Everything we do, guys, I don't think you realize
Gets
is
pre-approved.
we write, we pre-approve. It has to be compliant. We can't make recommendations. There's so many things we can and can't say, and our teams across the company make sure we stay compliant. So we we don't get in trouble with our regulators. And every week they review the show ahead of time. They review the show after, and we cannot do the show without them. So big thanks to everyone, Corey, Jamie, Trisha, who aren't here anymore, Matt,
Yeah.
Eric. You all know who you are, and I'm sure I'm missing a lot of people. And then our social team in the chat. You've got say hi in the chat, Robin Hood support. Give a type there. They're making sure you guys are hanging out in the chat and everything's cool, and making sure every week we capture everything you guys say, and we can hang out and once again stay compliant and do all the things we need to do. But all of that to say, this has been a hell of a year and a half building this show, shipping it, spending time with you guys every Friday, meeting you in person. But this isn't goodbye. This is a see you later. We're gonna build something better. Hopefully, really engage the active trader set. Steph, they can still find you on socials at Steph Guild NYC.
Yep. Trying to post more so I can be around for you guys.
And then also too, if you're a strategies customer, you're going to hear from her every day in your app.
Not every day, but
most days. Most days.
No, I record like once a week, once every 2 weeks, just when it's important.
And last, but certainly not least, to you in the chat, especially going back to day one, Edsman, you've been with us this whole time. We love you. We love meeting you in Hawaii. Quantum, Queso Dip, CC, Los Emotions. Oh, KO, Kelsey Obacina. Long-time listener, first-time caller.
Oh, she's one of my faves, too.
Yeah, my parents watched the show. They're going to be distraught. Oh, yeah. There's Kelsey. We'll miss you guys. Can't wait to see what's next. Oh, yeah, and we'll see you in Hawaii. Yeah, we're going to be in Maui. Come find us. But, yeah, that's it. The week that was, this has been a pleasure. One of my favorite parts of my almost 20-year career stuff. Couldn't have done it without you every week. You have grown so much from the first show to now. You are.
I know.
TV.
You made me much better presenter. So I am forever grateful for that. And I've learned so much from you, Obi. And I will. This is not over. It's just not over. It's just goodbye right now.
We'll see you on the other side of the new year. For Steph Guild, I'm Mike Obacina. That was the week that was. We'll see you soon.